Hey, what's up guys? There are many large financial players are currently buying Bitcoin at this price. In this video I will explain who is currently buying Bitcoin, then we will take a look at the new Michael Saylor Bitcoin price forecast. Listen up, you already invest in crypto. Why aren't you investing in tax-free crypto? iTrustCapital is the only provider that allows you to invest in crypto assets within your retirement account. They allow you to not only buy Bitcoin, but Ethereum, Ripple, and many others. They even have Chainlink coming very soon. It's designed for beginners and experts alike. They give you 24/7 trading access and even have built-in institutional-grade secure storage. You do not need to worry about creating private keys. If you open an iTrustCapital Roth IRA, it allows you to buy Bitcoin now, and when asset grows over the next few years, you keep all the profit for yourself. No taxes. If you want to learn more, head to iTrustCapital.com and request a free insider guide now. This will teach you all about crypto retirement accounts and how you can invest tax-free. Link to iTrustCapital is in the description box below. I hope everyone had a great weekend. Now is Monday, my favorite day of the week. Let's get back to work. Let's start with CoinMarketCap.com. As of the time of this recording, the entire cryptocurrency market is about $1 trillion of market capitalization. Bitcoin is around $34,400. It's up since yesterday by 6%, but it's down the same 6% for the past 7 days. Ethereum looks really good. It's wiggling around 2017 all-time high level, slightly under $1,420 a coin. Polkadot is a recent player in the top 5 cryptos. Not too long ago it flipped to Ripple XRP. Then we also have Cardano and Chainlink finishing up top 7 cryptocurrencies at the CoinMarketCap.com. If you take a look at the Bitcoin market, currently Bitcoin is in downtrend since it's reached its new all-time high of around $42,000 a coin. I'm not worrying about that, soon I will explain why. Nonetheless, the lowest point Bitcoin dropped in this downtrend is $28,600. From all-time high to that price level, that would be 32% decline. Can Bitcoin drop lower? Sure it can. Short-term fluctuations is unpredictable, it's just random noise. On the other hand, this chart indicates that the real bull market has not even started yet. This chart represents Bitcoin price action since 2010 as well as Bitcoin 90 days volatility trend. If volatility breaks a certain level, there is a good chance that the Bitcoin enters into the bear market. Volatility broke an upper level and Bitcoin gradually increased from $10 all the way till $1,100 a coin over the course of 18 months, and that would be over 100x ROI. Soon after that, Bitcoin went into the bear market and volatility decreased respectively. In mid and late 2016, the same scenario played out. In mid-2016, volatility showed a fake breakout, in which case Bitcoin dropped back under the certain level. But shortly after that, volatility took another spike, in which case we were already in the bull market. At that time, Bitcoin was trading at around $1,000 a coin. 12 months later, Bitcoin increased all the way till $20,000 a coin. And that would be 20x ROI. Not bad at all. Of course, just like in the previous times, soon after that we went into another bear market while volatility dropped as well. Now just recently volatility once again crossed that level, which means there is a high chance to have a massive continuation of this bull market run. In previous 2 bull markets, when volatility crossed that line, Bitcoin generated 100x and 20x. It's hard to say how many multiples Bitcoin might generate in this bull market, but we only need 3x from this current price for Bitcoin to reach $100,000. If Bitcoin crosses $100,000, it does not mean it will stop there. But how many people will be able to afford a single Bitcoin at 100k? Not that many. In fact, predominantly financial institutions, private and public companies will be able to buy an entire Bitcoin. This is why the whales are not waiting. Right now, they're accumulating Bitcoin. If you take a look at this chart, whales with at least 1k BTC in their wallets continues to accumulate and expand their Bitcoin inventory. We just had this massive spike with the number of addresses with at least 1k BTC in it. Now there are close to 2,500 BTC addresses with at least 1k BTC. 1k BTC at the current price, that's a lot of money. That would be $34 million. $34 million, it's a life-changing money, but they're not planning to sell, they just add in more and more. As Michael Saylor said, Martin today announced that it has purchased 4,812.66 BTC on aggregate purchase price of around $150 million. Another company adopts Bitcoin as a treasury reserve asset. If they bought 4.8k of BTC at aggregate price of around $150 million, that means they bought Bitcoin on average price at around $32,000 a coin. If they are buying and whales are buying, then you should definitely consider looking into the Bitcoin and not wait for another 50% pullback. This is what was published. Martin Patent Group Inc., one of the largest enterprise Bitcoin self-mining companies in North America, today announced that it has purchased 4,812.66 BTC on aggregate purchase price of $150 million. As a result, the company has strengthened its position as one of the only Nasdaq-listed pure-play investment options for individuals and institutions seeking exposure to Bitcoin. Shortly after that, this funny meme came out. I have looked into MicroStrategy, Square, and now Martin. Turns out that we have more in common with polar bears than we thought if we do not have any Bitcoin. This is what financial institutions, banks, companies, and no-coiners are currently thinking if they have no exposure to Bitcoin. Speaking of Michael Saylor, he just recently had a great interview where he explains why Bitcoin dropped by 30% while gold did not, and why volatility is something you should not be worried about. Let's take a look.
As many people know, I come from the gold world. And I guess I speak for a lot of gold people of having a hard time accepting Bitcoin as a form of wealth preservation. So I'm asking you, Michael, help us cross that divide, right? Because, and again, I'm speaking from the gold world, most of us will see it as a speculative play, but it's very frightening to know where it will be in 30, 40 years down the line.
Well, I think that gold served as a store of value because it was hard to produce, and every wealthy person on the planet agreed that gold was the principal fundamental money, right? The gold standard, if you will. 5,000 years of the gold standard, it makes sense. All these things make sense until humanity invents something or engineers something better. Horses, wooden ships, swords, bows and arrows, brick walls, roads, they all made sense until we had airplanes and electricity and modern technology and telephones and the like. So, Bitcoin is, you could think of it as a social network combined with money. If everybody on the planet agreed to put their money on a digital network, the Bitcoin network, and sell their gold, you would have something which had all the benefits of gold, none of the liabilities of gold. That's what's happening right now, right? That's why Bitcoin is up 300% in the last 12 months, and gold is up 15%, right? If you wanted a year when gold should have performed, a year of political instability combined with monetary expansion, this is the best year I can remember in my lifetime. When, well, maybe back in the 70s you had something, but in the last 20 or 30 years, this is a year when gold should have performed, but it didn't. And the reason why it didn't is because Bitcoin is digital gold. And when somebody comes along with something better than the 5,000-year-old non-technology or old technology, it replaces it. Now, why is Bitcoin better property? Well, because it's pure monetary property in cyberspace. It has no weight, therefore I can move it at the speed of light. It has no jurisdiction. Gold has to go into a vault in Manhattan or in London, and some bank, some counterparty, and some government has some control. I can't move $1 billion of gold with my head in a few seconds from one side of the planet to the other side of the planet. And so as long as you have mass and locale, the property is going to potentially be impaired. If you had $100 million and you bought land in California, the governor of California has some power over the value of the land. The government can impair the asset. If you take $100 million and you put it in gold and put it in a vault in a bank, they can impair the asset. The government, the governor, the mayor can impair the asset. The laws of physics impair the asset. I can't wiggle my nose and move the gold a million times in a split second. The laws of physics control me. With Bitcoin, the government can't impair the asset so easily. The laws of physics don't impair the asset, and software engineering enhances the asset. So if I'm looking for a way to pass monetary energy, money, 30 years in the future, I have to figure out how it's not going to be impaired. And of course, that just means I want the least number of moving parts.
Absolutely. And those are all extremely valid points in regards to Bitcoin. And in regards to the returns, absolutely. Bitcoin's returns, no comparison to gold's. But we also don't see, a 30% correction in a day on the gold front. So again, as a store of wealth for someone who wants to sleep well at night, how do you get over that? Those massive corrections that we just don't see in the gold market.
I, first of all, I think that the massive corrections are becoming less massive year by year, quarter by quarter, month by month. The market in Bitcoin is stabilizing as more institutions come into it. And I think we can see it over the past 12 months. Second, I think that everything that's living on this earth is volatile, and things that are dead are not volatile. And so I would much rather have a volatile 300% return than a non-volatile 15% return, or a lesser return. And there's least volatility in cash with a 0% return. So stability is stagnation, volatility is vitality. Living things are volatile. I like living things. I want to live. Life force implies volatility. It's like a Jedi mind trick to convince you should be afraid of volatility. If volatility is going to return 200% pre-tax every year for 12 years or for 10 years, and you're afraid of it, you lost 99.5% of your wealth because you're afraid of volatility. That's like, you can't raise your children in a bubble and tell them they should not. I mean, if they stay in their basement and they never leave the house and you surround them with the bubble, how are they going to grow and live and prosper?
No, I like that. You're getting me there.
This is true that recently Bitcoin dropped by 30% as I explained earlier, while gold did not. But if you take a look at the entire year, as Michael Saylor explained, Bitcoin is up by close to 300% while gold is up by only 17%. As I said many times before, and this is the most important lesson you can learn in financial market and especially in Bitcoin market. Write this down right now. Volatility is the price you have to pay if you want to generate a huge return. Don't be scared away of volatility. I look at volatility as a potential market opportunity, not as risk, which currently defined as volatility in modern finance. Now, let's take a look what Michael Saylor has to say about his new Bitcoin price prediction.
Price forecast. They love hearing it. I think you have the biggest call out there still. But where is Bitcoin headed, Michael?
People ask me about that. And the point that I make is Bitcoin is not a stock, but it's not even an asset. I mean, if it was a stock and it went up by a factor of 10, then you're valuing it versus the underlying cash flows, and you're thinking that the P to E ratio is blowing out, is becoming very risky. But it's not a stock. A stock is a reflection of the outlook of the cash flows of another unrelated product in a fiat currency system. Bitcoin is pure monetary energy. As the price goes up, the monetary force related to Bitcoin goes up. The attraction that monetary force has, like a gravitational force to money, goes up. So if you want to understand where Bitcoin is going, you look at the entire worldwide monetary system, and it looks like there's $200 to $300 trillion worth of money that's looking for a store of value. In a monetary expansion environment where I crank the monetary inflation rate up by 15%, that $300 trillion has got to find a store of value that's not a fiat derivative. That means that Bitcoin is going to keep growing, and its monetary force is going to keep growing, and it's probably going to grow 200% a year until it has demonetized gold, silver, sovereign debt, bond indexes, stock indexes, every source of monetary energy, which is just a store of value for someone that doesn't want to lose their purchasing power and they need a scarce asset. That being the case, I don't really see an end to up. I think it's going to keep going up for the next decade, at a rate that's pretty commensurate to what it's been doing for the past decade.
Michael Saylor said that there are $200 to $300 trillion are looking for a simple store of value. Here's something new that he said. He expects Bitcoin to grow at 200% of compound rate to demonetize that addressable market value for the next 10 years or so. So let's do some math. If Bitcoin grows at 200% annual compound rate for the next 10 years, it means that by the end of 2021, it should be at around $100,000. By the end of 2022, it should be around $300,000. By the end of 2023, it should be around $900,000. By the end of 2024, it should be around $2.7 million. By the end of 2025, it would be around $8.1 million. If we continue to extrapolate at 200% annual compound rate, the numbers are getting so huge. By 2030, a single BTC would be over $1 billion. Of course, I do not think this is going to happen. I think Michael Saylor actually did not go through these numbers. I think it's more realistic to stick with $300 trillion addressable market cap, in which case Bitcoin would be at around $15 million. Let me know what you guys think about Michael Saylor's new Bitcoin prediction. Leave your thoughts in the comment section below, smash that like button and subscribe for more videos.